Welcome back to Talking Wealth, our channel exclusively for financial advisors. I'm Ben Carlson. Today, my guest is Nick Downer. Nick is the head of advisory services at Opto Investments. Opto is a tech-driven platform that helps financial advisors and family offices better manage private investments. We're going to discuss how Opto does that today, along with their new tool for AI that helps private market due diligence and much more. But first, a quick word from our sponsor. Today's show is brought to you by our sponsors at Betterment Advisor Solutions. If you happen to be thinking there's got to be a better way to grow my RIA, you're not alone. Betterment Advisor Solutions, we do the heavy lifting so you can focus on what matters most, your clients. From improved service that makes asset transition smoother, to fast paper-free onboarding that delights clients on day one, we've built a digital-first platform designed to streamline your operations and make life easier. Now, if you're thinking, wow, they take the paper out of paperwork, then you'd be right. Grow your RIA your way with Betterment Advisor Solutions. Learn more at betterment.com/advisors. Investing involves risk, performance not guaranteed. All right, Nick, I want to talk about you and Opto today, but first I want to talk about myself. So one of my original roles with the institutional world back in the day, this is 15, 17 years ago, is I was tasked with taking charge of our private investment side of the portfolio. So we had 10 or 15% in private equity, venture capital funds, and then maybe 10 or 15% in hedge funds, right? The institutional, we were doing our best to do the Yale model. But we had a very small team. It was three of us. I was kind of the low analyst on the totem pole, and it was on me to track capital calls and go to all the different data rooms to track all our private investments and model them out and keep all the presentations in one place. And to be honest, it was an overwhelming job. It was 30% of our portfolio, but probably 80% of my time working on it. It was a lot, and it made me really weary of private investments at the time, because I realized, wow, it's not just the due diligence you put into understanding the investment team and the strategy and the opportunity set, it's the operational heavy lifting. And oh my gosh, I could see if you didn't have the right team in place, because a lot of the other, these big endowment funds had whole teams of people that could do this. And I'm just one guy trying to learn this on the fly. And it was too much for me, and that kind of soured me on private investments. Obviously, the world has changed now, and I guess that's a good opportunity to understand, what has Opto done to try to make that a much easier job for financial advisors and family offices that are trying to do this?
Yeah, for us, it's all about technology, right? We were founded by Joe Lonsdale now nearly 5 years ago, and the idea and the thesis that we wanted to solve for was exactly the pain points that you just mentioned, Ben, right? For us, the issue historically has been capacity, right? How do you take on, build, fundraise, and manage a private market program? For most RIAs, they don't have the same operational capabilities. They don't have the same investment teams. And so how do we help bring technology to those groups so that the blocker is not, I don't have time to do this? And it allows you to be a lot more selective on the how and the why we're going to deliver these investments to our clients. And so technology is at the backbone and forefront of what we do here at Opto, and it's about empowering the advisors we work with to be more efficient and to make these allocations in a way that makes sense for them and their clients.
So you showed me and a couple of people on our team your AI tool that is essentially tracking due diligence on these private investments, because it can be a lot. Sometimes you have clients who come to you who already have a book of private investments. If they're a new prospect coming in, they may say, hey, I have these investments. Can you help me with them? Or it could be, hey, I'm seeing these deals on a monthly or a quarterly basis. Can you kind of take a look at them and let me know what you think? And again, that's hard for a lot of advisors if they don't have the team. So what is your new AI tool doing to help that process?
Yeah, so look, here at Opto, we want to work and act as an extension of our advisory partners. And so one shape that takes is on the investment side. We understand that many of these advisors work with clients who have previous books of business or are working with clients who are at the golf club or at cocktail parties and hearing about interesting private market opportunities. And what we want to do is empower the advisors we work with to help with that top of funnel, to provide a more sophisticated and impactful response on why we should or should not move down or go down the line with investing in one of these opportunities. And the technology that you just mentioned, Ben, that we talked about a couple of weeks ago does just that. And so essentially what this technology allows you to do is to pull information from data rooms, websites, schedules of investments, et cetera, to provide a scope and a recommendation that's going to be more than just a thumbs up or thumbs down, right? Each one of the shops that we work with today has their own investment philosophy, has their own way that they think about risk and client outcomes. How do we put that infrastructure in place so that you can screen some of these investment opportunities and give a thoughtful answer as to why we should or shouldn't pursue it. And so what we find is, if this is a process that we in our seat working with RIAs across the country, we see thousands of deals, right? I think our team has screened over 3,000 deals in the last 2 years here. And volume is a problem, right? Because when we're working with RIA partners, we want to help provide the right investments to them. We want it to match up both from a timing perspective of who is fundraising and when, but also with the outcome that they want to help create. And this is very different from the public market space where you can go in and log into Morningstar and Envestnet or whatever it may be to go down and track and sort by where the top performers. That doesn't exist here. And so what we want to help build is part CRM for private markets, but also part recommendation engine. And so we work with RIA partners to put those parameters in place. It can be everything from let's screen by fund size, let's screen by vintage, let's screen by return, et cetera, et cetera. And let's feed it through this system so that, Ben, in your first job, you're not having to spend hours and hours and hours to get to a no, right? So let's figure out how we spend time in areas that make sense because they've made it through our first, second, and third checks, so you can be more impactful and add more value to these client interactions.
And that's the thing for a lot of advisors. It's not necessarily that they're going to say like, yes, you definitely need to invest in this, or no, you don't. A lot of time it's providing context, right? Because it might not even be a private investment that you're bringing to the client. It could be, like you said, from the golf course or something. And you just want to let the client know, here's the pros and cons, here's the red flags, here's what you should consider. And I think just helping the client be more informed if they need to go down the road and do more due diligence on this, or if I think the best part about it is providing someone an easy no. Right, like, no, look at the track record on this and look at these other funds that do the same thing much better or much cheaper or whatever. So I think that's a big part of it. I guess the one question I have, the fact that it's an AI tool, and I think a lot of advisors are being inundated with these AI tools now, is how do you distinguish yourself using an AI tool? Because like, how do you ensure it's not just some other type of like commodity like product that, well, if everyone has access to this AI, then what sets it apart? So I'm curious how you think about that in designing a tool like this.
Yeah, so I think there are a couple important points here. First, I think that this is where humans and AI need to interact together, right? The prompts and the way that we structure and ask questions of this screening tool is going to be the value that we provide here. AI does a lot of really interesting things. We can load up just about anything in the AI today, and you get some kind of output. But if that output is not actionable, it's not really going to be helpful when you think about how you structure your private market investments, how you engage with your clients. And so what we do as part of our investment team and where we work with advisors is have a lot of those questions, again, about risk, about objectives, about outcomes, to make sure that the inputs and the prompts that we're providing when we're scraping this data really foots and makes sense with the way that they engage with their clients. And so for us, that's super important. Humans cannot do this alone because the volume is overwhelming. AI cannot do this alone because the output is not really that actionable. And so we want to marry both humans and AI in this case to allow this to be a really useful tool so that when you're engaging with your clients, like you just mentioned, Ben, right, you're thoughtful in that. They see you as a thought partner, and you can add a lot of value in that relationship. And so I think a lot of it has to do with the structuring where we spend our time with our advisors.
So obviously tons of talk these days about private investments in the wealth channel. Besides this due diligence product, which is relatively new, like what else are you doing to help advisors in this space?
Yeah. So for us, it's all about building private market programs, fundraising for them, and then managing them. And I think what we find is, every RIA has a different approach when it comes to investing. Every RIA has a different set of clients that they end up working with. They have a different set of biases around private markets and around asset allocation. But I think what we find is this build, fundraise, manage process, technology as part of it, will allow you to be more efficient in any area where you want to spend more time. And so I'll give you a couple different examples here, but we work with a lot of different shops who have all the access and know how to do the diligence on these private market deals. They just need help to build it to scale. And so our technology will allow you to do this easier, right? So when you think about subdocs, when you think about capital calls, when you think about K1s, you can do this at a scale that wasn't possible before, right? And bring it to a broader client base. On the flip side, we work with a ton of clients who basically say, I don't know the first thing about investing, but I know I need and want private markets in my portfolio. What's the right way to do it? And so we can use our technology to help using something like this DDAI tool to help screen the universe, to help make sense of what's out there so that you're not flailing looking at hundreds and hundreds of private market funds before you bring them to clients, right? The idea that we want to help with is the why behind private markets And technology is going to help unlock a lot of that on the building private market programs, fundraising for them, and then managing that experience so that every year, every investment that you're looking at, clients go, this makes sense in the context of what we are trying to do as an advisor-client relationship, and then where we go forward from here. And so it's all about scale. And generally what that means is we end up building private market funds, right? So think about these as like multi-manager solutions that sit at the firm level that allow you to build a hub and spoke model that wasn't possible before without this type of technology.
So especially, I think for those advisors who are a little green in this space, who don't understand it, who come to you and say, hey, we need some help here, right? Our clients are clamoring for private investments in some form. We don't have a lot of expertise in this space. So where do you start with them? Is Opto offering solutions and saying, hey, here's like this prepackaged group of funds, tell us what you want, we can make it for you? Like, how much advice are you actually offering to these financial advisors?
So the answer is a lot, but I'm going to caveat that by saying that it's all about understanding who we're working with first. I think that where we're different from some of the other providers in the space today is there are plenty of providers who act as marketplaces, and there's nothing wrong with that, right? GPs will pay these intermediaries to distribute their product. LPs will pay those intermediaries when they buy those products. It's a place where you can go take a look and say, hey, I want to buy some private credit funds. Let's take a look and see what's on the shelf and go do that. Our thought is we're structured as an RIA as well. And so for us, it's all about understanding our client and what they're trying to do. And so how does it ultimately work, right? We spend a ton of time with advisors. We spend a ton of time with investment teams to understand, what does your firm look like today? Who are the clients that you're serving today? Where are the gaps and where are the pain points? And then based on those conversations, we can provide recommendations on different structures, different investments, different approaches that make sense within that space. And so, because we're structured like an RIA, we're held to the same fiduciary standards that you all and many others are. And for us, it's all about client outcomes. And so for us, it's not a one-size-fit-all approach. There are areas that make more sense depending on who you are and who you work with. But for us, we want to go down that decision-making tree to decide what makes sense. And then, for us, we want to provide that level of advice and service to say, here's what we would do in your shoes. Ultimately, it's your clients and your money. But for us, I think that our value is not only the technology to bring this to scale, but you have a partner who basically says, this is what we would do and here's why, versus just shop off a list and we'll go ahead and check that box.
So obviously you're providing a lot of advice and education to these advisors in a lot of instances. How are you helping them take the next step, which is providing advice and education to their own clients on these things? Like, how do you help them communicate with their clients? Because obviously the stuff that you're going through with advisors probably is much more intricate detail than a lot of the end client wants or needs to know. So how does that educational piece fit in?
Yeah, so we think of it about this almost in the sense of like a pyramid, right? Where at the top you have the investment folks at any particular shop. Those are CIOs, directors of research, people who are day to day doing the evaluation. Next level tends to be the advisory level, right? Where they don't need to necessarily know quite as much as the CIO does, but they need to know about portfolio construction. They need to know about what's going in their client portfolios and what makes sense for what's next. And then below that, you've got the clients, right? And the clients, there are sophisticated clients, there are unsophisticated clients, but ultimately they want peace of mind and safety, right, when they're working with these advisors. And so, I mentioned we act as an extension of our RIA partners. Oftentimes that can be on the operational side when it comes to the blocking and tackling of getting these private market programs off the ground, things again like subdocs and capital calls and K1s. We can do that also on the investment side, right, with things like our DDAI tool or with our investment team to help bring private markets to people. But also where this comes through is on the marketing side. And so, my team and the marketing team here at Opto act as an extension of the partners that we work with. I think what we find is we want to spend a lot of time to figure out, how are you communicating these nuances to your advisors? How are those advisors communicating those nuances to clients? And what infrastructure and what materials or artifacts can we put together? And so many times what we're doing is filming videos, right, with folks at the RIAs to say, let's talk about your investment philosophy. Let's talk about how private markets fit in. Let's talk about how this investment makes sense. We can cut those videos up, provide them to advisors who can provide them to clients. We can also do that with presentations and with one-pagers or four-pagers, however is going to make sense to have that message come through, but also be consistent, right? So you're not playing a game of telephone from CIO to advisor and client and having that end message be wrong. And so I think for us, that's a really important piece around partnership. Again, when we think about us and our role as an intermediary, we want to be a fiduciary and a partner to our clients, telling that story via whatever medium, whether those are videos, white papers, or presentations, we're happy to go down any one of those paths and make our team available to our clients.
It's interesting that you help out on the content angle because I hear from a lot of advisors all the time who say, "Hey, listen, I know content is a big form of what you guys do at Reynolds Wealth.
Mhm.
How do I do that?" And a lot of them don't know how to take the first step in understanding, do we make a video? Do we make a white paper? So I think helping provide that for advisors is a really cool service because a lot of them know that it's a good way to communicate with clients. Like you said, if you create a video that you can then share with all of your clients or share with new prospects that come along, that's much easier than having to do it over and over again on an
Right.
individual basis. So I think that's really helpful because a lot of advisors know content is a big piece of it, just don't know where to begin because they've never done it before.
Right. And, I think we're lucky. We're in a position where we work with many RAs across the country, big RAs, small RAs, RAs who have done private markets forever, RAs who have never done it before. And I think what we've been able to do is put together a framework that's to say, depending on who you are and what you're trying to achieve, here are the resources that we think make sense. And so, the content game is it's a difficult one to start, but what we want to do is get the wheels turning on it, right? So you feel more comfortable, so you can tell your story. And then, look, if we're doing it right, this will help you market your firm both internally and externally to help drive and grow additional business opportunities at your company.
So in the institutional space, one of the things I learned pretty early on is that hedge fund was like this catch-all phrase, right? But it included all these different strategies. There's merger arb and long short and multi-strat and trend following and managed futures and all these different hedge funds in this one bucket. The same is true with private investments, right? There's private equity, but within private equity, there's middle market and smaller private equity and large LBOs.
Mhm.
Then there's venture capital and private real estate and infrastructure. I'm sure I'm forgetting a few, but I think that's one of the overwhelming things for people is understanding, am I just looking for private credit funds or am I really looking for a more diverse basket? Like what are advisors looking for these days? And I'm sure it runs the gamut here, but like, do most advisors come to you and say, "Hey, listen, I just want something simple like private credit," or "No, I want to help you. I want you to create this diversified fund of funds for me that I can offer to all my clients." And it kind of fills up the bucket of all of these different spaces. So we're pretty well diversified.
Yeah. So we hear it all. I think that the answer is it depends. And we like to almost turn that question on its head because I think that for so long in private markets, the approach has been let's sell a shiny object and then let's figure out which clients is it right for? How much do I allocate? Where do I source this from? And I think what we want to do is turn that on its head, right? What we want to talk about is what's the outcome that we're looking to get out of this approach? Sometimes that's going to be a multi-manager solution. Sometimes that's going to be a single solution. Sometimes that's private credit. Sometimes that's real estate. But for us, what we want to do is, again, figure out what the goal is in this case and then address that goal. Because oftentimes what we hear is people say, "Look, I heard about this really interesting private credit manager. I'd like to get invested in it." You ask a bunch of questions about the why, and it turns out that income and private credit isn't the right solution. And so I think generally what we want to do is spend our time working with our partners to figure out who is this for, what makes sense, what's the risk appetite again, and then build the right product around it, starting at the asset class level, and then working your way down into the specific funds. I think that, to go to answer your question more specifically, Ben, I think broadly there's been a barbell approach that we've seen recently. Obviously, a ton of news around private credit, and it seems like everyone's got a private credit fund or a BDC in the last several years, but people have been balancing that with some early stage venture, right? So you have this barbell built around private market exposure, but it's not just a single solution. It allows you to drive growth on the early stage venture side, but also have some income, right? And in a fixed income replacement in something like private credit. But again, that is the broadest brush I can paint with. And I think what we find is every shop, because of who they are and how they are already set up, is going to have a different set of needs and wants.
Private credit has to be the easiest one from an educational perspective, right? Because it's just the yield sells the easiest, right? Even though some of the stuff inside those funds might not be easy for everyone to understand, it's a loan and someone has to pay it back, right? So
Right.
I got to imagine that part on that side of things is pretty easy, at least.
It is. I think that I've spent a lot of my career in fixed income prior to joining Opto. I joined Opto a little over nearly 4 years ago now. But I think that this is the mental hurdle that many people end up working themselves through, is they think about private markets as being something entirely divorced from their existing exposures. And the reality is these are really just extensions of your public market exposure, right? There are similar dynamics when it comes to things like private credit and the income component. There are similar dynamics when it comes to public equity and private equity exposure, right? It's just a question of transaction and listing and how it shows up. But I think that that's where we spend a lot of our time. And to your earlier question on the marketing side, that's a message that we want to help get across is this is something that is maybe new or maybe different, but it's not so different than you think, right? And how do we build that bridge from where we are today and where we want to go? And part of that is talking to and connecting with advisors and end clients to figure out what's going to resonate and ultimately showing them that something like private credit is not so different than fixed income, and likewise private equity and public equities.
So I'm curious, how did you at Opto build your sort of institutional knowledge and relationships with these different private managers? Because they're I don't know what the number is. One of the KKR guys in the Wall Street Journal a couple weeks ago said something like, I don't know, 18,000 private equity managers. It's a big number, whatever it is.
Right.
How do you develop those relationships? Understand, which ones are worth looking at and which ones are worth just completely setting aside and leaving alone.
Yeah, so I think for us, there are a number of different components to it, right? I think that we're really fortunate to have Joe Lonsdale as a founder here. Joe's network experience and exposure is one that not many people get, right? So we want to bring that network to our clients. We've got our own internal investment management team as well. They do a ton of mapping. I mentioned over 3,000 firms and funds that they've mapped over the last several years here. That's all part of the process. But then our partners, right? The RIA partners that we work with are always bringing funds to us and using things like our DDAI tool, right? And as people think more critically about what they want in their private market exposures, they're being introduced to people at the golf course, at the cocktail party, right? For us, we want to help build that mental map so that when someone is fundraising, if they're looking at 6 different private credit funds, we can provide a recommendation on which of the 6 makes the most sense. And so this map is growing every day, right? We don't pretend to say we've got it entirely covered, but what we want to do is, again, be an extension of the folks that we work with who have their own network, right? Who have their own relationships. Let us help you grow that. Let us help you make the right decision. And, the many thousands of managers that we've screened over the last several years is part of that. But, every day and even this morning, right, we've got a Slack channel set up. You can see funds being uploaded into our system, requests being asked, and all of that helps us provide better recommendations, and I think allows clients to make better decisions when it comes to putting these private market allocations together.
So we at Ritholtz talk to a lot of fintech companies. Like Michael and Josh and I are having these conversations a lot, and it's funny. We always think it's a red flag when someone asks us, like, "Hey, just help us understand the RIA industry," right?
Yeah.
Like people can see the opportunity set there,
Yep.
and obviously a lot of private investment managers see the opportunity as well because a lot of those institutional buckets have been filled up, right? And there's not enough room because if you have a 40% allocation, there's not much more room to allocate more money there. So I guess I'm just curious what you've learned working with RIAs and how it's sort of helped shape Opto in some ways and what like the feedback has been. And because obviously the dealings of an RIA working with families and clients that have a much different range and size than institutions, it's kind of a different ballgame. So what have you guys learned from RIAs?
Yeah, well, I think you hit the nail on the head, right? I think for many years it was take a look at these institutions. RIAs should be more like these institutions, and you need to have a 40 or 60% type allocation to private markets. And to your point there, Ben, like that's just not the case, right? The way that a foundation, an endowment, or a pension fund operates can and should be very different than the way that Mr. and Mrs. Smith, right? Think about their asset allocation. Think about the way that they deploy capital. And I think that for us, that's a really important point. We work exclusively with RIAs, right? Those RIAs clients, by and large, are high net worth and ultra high net worth individuals. And the way that they think about contributions, distributions, the way that they think about planning can and should be very different than the institutional model. And so I think, what have we learned as a result? For us, it's about allowing and unlocking this story, right? Where and how can private markets be impactful for your portfolio? And also, what sort of outcomes are we looking to shape as a result? And I think what we want to do is not have that conversation around like, you need to look more and more like an institution to make this happen, but what approach, what pacing level, what type of allocation this year, next year, the year after is going to make sense for you and your family? And then how do we do that at a level so that it scales across your business? And so, for us, again, because we only work with RIAs, I think what we've been able to do is take a lot of the lessons on how people think about asset allocation, how people think about incorporating private markets, take those data points, put them together, and then provide better recommendations on here's what we do this year, here's what we do next year. And then if you're open to considering other opportunities, here's how we might build like a hub and spoke type model if we were in your shoes.
So Larry Fink in his annual letter for BlackRock this year said they're thinking about it not in a 60-40 portfolio anymore, but a 50-30-20, right? 50% stocks, 30% bonds, 20% alternatives. When you have your conversations with the advisors, obviously, again, it runs the gamut, but is that a target people are actually shooting for these days? Are they starting small and dipping a toe in the water and saying we're going to do 5% in privates or 10? Like, what is like the median or average number you're seeing from advisors that want to allocate to private investments in their client portfolios?
Yeah, so I think today it's like 5 to 10%, right? Of like where people want to get to, right? A lot of the people we talk to may already be there and they're going to like the 10 to 15% range. But many shops that we talk to are in the single digit side of things, right? And they're 2% or 3%. And they say, as my business is growing, right, whether that's organic or through acquisition, I know that the process and this allocation that we have in place is not going to scale in the same way. And, I think that there's something to be said, and we're biased, right? Like we are a private markets company. We want to help everyone get to a 20% allocation, but that may not be the right approach for everyone. And so again, I think for us, it's about taking that step back and saying, you're at 2% today. What subset of clients makes sense to have this type of exposure over what time period? And, how do we help tell that story together with you? Because if you go from 2% to 20% overnight, is that going to be the right client experience? And I think, again, more often than not, the answer is no. And so how do we go from 2 to 5 to 10 to 15? And how do we do that over a period of time where it's not going to feel like a departure from many of these shops who have either had no exposure to or have even said like private markets aren't for us, right? If you're introducing private markets and you're saying, well, we're at 0 now and we want to be at 15% tomorrow, but for the last 10 years, all I've heard is private markets aren't for us and they aren't for you. It's going to open up a lot of questions about who you are, what you do, and that relationship you have with your clients. So we want to be supportive, right? We want to be a support feature and extension of how our RIA partners work. And again, generally what that means is let's walk before we run. Let's make sure that we've got the hub in place. And then we can always build up and around it, depending on who your clients are and, again, what you're trying to solve for.
Jerry Seinfeld said that breaking up is like tipping over a Coke machine. You have to rock it back and forth a few times. That's kind of the same thing. You're right. If you just rip the Band-Aid off, that's going to be tough for clients to understand. If advisors want to learn more about Opto, where do we send them?
OptoInvest.com. OptoInvest.com. We have a ton of information there. We have a form that you can fill out to get in touch with us. My email is nick@OptoInvest.com. We want to help partner with you guys and find ways to work together on private markets. And so a ton of information there, both on our site and through us and our team here. But feel free to reach out. We'd love to connect and learn more about your practice and help on the private market component of your business.
Awesome. Thanks so much, Nick. Remember, if you're an advisor, sign up for our newsletter. It's talkingwealthpod.com, and we will see you next time.